It's been a wild week in both the stock and crypto markets, with both asset classes plunging to even further lows for the year. The S&P 500 was sent deeper into bear market territory, which is marked by a decline of 20% or more, and Bitcoin sunk to as low as about $20,000, putting it at levels not seen since December 2020. The ongoing fears of persistent and high inflation sent the asset classes further in decline, which then caused further panic selling and withdrawing of funds, which then set off a chain reaction of heavy margin calls and liquidations in the crypto markets. This created a death spiral, pulling prices down even further. It's a very similar cycle that was experienced with UST and Luna just last month. To quote Charlie Munger, there are only 3 ways a smart person can go broke: liquor, ladies, and leverage. Companies that are over-leveraged are not managing risk well and finding themselves in a liquidity crisis, which is why news just broke that Celsius is not able to honor withdrawals of customer funds, and the crypto hedge fund 3 Arrows Capital suffered liquidations worth over $400 million, leading to both entities facing insolvency. Will other exchanges suffer the same fate? Have the stock and crypto markets reached a bottom yet? Let's dive in. But before we do, like this video right now for the YouTube algorithm and subscribe to the channel if you're new here.
Just do it!
I've spent a good portion of my professional career investigating stock market manipulation and fraud at a major financial institution, and ultimately became the director of the entire investigations program. I have deep experience identifying patterns and red flags, and have had numerous investigations result in putting fraudsters behind bars, working in cooperation with the SEC and FBI. Think of real-life, modern-day Wolves of Wall Street. I still work in regulatory compliance, but no longer as a stock market fraud investigator, and I made the personal decision to withdraw all my funds from Celsius a few weeks before they froze customer withdrawals, and made a video laying out my concerns. The truth is, I wasn't 100% certain that this would all unfold with Celsius the way it did, but I saw enough patterns and red flags to determine that it was a high enough probability for me to get out while I still could. After all, nothing in life is certain other than death and taxes. Once 48 hours had passed, since Celsius froze all customer assets without any further update from their leadership, I went to their founder and CEO Alex Mashinsky's Twitter profile to see if he had made any statements, only to find that he had blocked me. I have never tried contacting him, nor have I ever had any prior interaction with him. And I would think he has better ways at the moment to spend his time than blocking me on Twitter. I sincerely hope Celsius is able to resume withdrawals again and folks are able to recover 100% of their funds. But unfortunately, no one knows the outcome at this time. And if Celsius is able to ever resume operations again, I don't see how they recover from the reputational damage. If you continue to trust Do Kwon after the collapse of UST and put your money into Luna 2.0 or Luna Classic, you have the freedom to do that. And if you continue to trust Celsius after the devastation and disruption caused by their poor risk management and leadership, that is also your freedom. But as the saying goes,
fool me once, shame on you. If fool me, we can't get fooled again.
Crypto is experiencing an eerily similar moment to the 2008 financial crisis, resulting from over-leverage to parties who were not creditworthy and the bankruptcy of major financial institutions like Lehman Brothers and Bear Stearns. The government bailed out the banks and economy back then to help stimulate the recovery, but I don't envision the same thing happening for crypto right now. As scary and painful as this all is, this is not the end of crypto or centralized exchanges. Other exchanges or projects may not survive, but this too shall pass. And regulation on crypto exchanges will be accelerated to mitigate the risk of this continuing to happen. Fair and reasonable regulation is not the enemy here. Predatory lending and lack of required internal controls to manage risk at the exchanges is. And once regulation comes, it is my firm belief that institutional money will flow into crypto assets once fund managers feel they can securely do so. You might be familiar with the saying, not your keys, not your crypto. All this means is that when you deposit your crypto on a hot wallet on an exchange like Celsius, you are relinquishing control over these assets, and Celsius is free to use them in any way they see fit. They use your funds to lend it out and trade it to generate revenue, which they then share back with you in the form of rewards. And if Celsius faces bankruptcy, you may not have any legal way to ever regain ownership of your funds again. This is very clearly stated in the cease and desist issued to Celsius by the SEC in September of 2021. There is no free lunch, and you have to not only understand the risk associated with an investment decision, but also accept that risk. Celsius has retained a prominent law firm to explore different options for its insolvency issues, such as obtaining financing from investors and financial restructuring. Now, if you want to continue holding all or some of your crypto on a central exchange for the rewards, it's not a bad idea to consider spreading out your assets over more than one platform you feel comfortable with to diversify your risk. And this now brings me to the next question, which is, when will the market crash end? The honest truth is, no one can accurately and consistently predict the market bottoms or tops. And from my perspective, the markets won't reach a bottom until the death spiral of panic selling, withdrawing, and liquidations end. The market is flushing out a lot of toxic leverage at the moment that helped contribute to the parabolic rise in crypto and stock prices over these past couple years. Think of the stock and crypto markets as a mansion of a house of cards that got built from a low interest rate environment and unprecedented stimulus, just waiting for a big gust of wind to blow the whole house down. The tide in market sentiment won't truly turn until confidence can be instilled in the Federal Reserve that they are tackling inflation. And they can tackle inflation by continuing to raise interest rates at a more aggressive pace without catapulting the economy into a deep and persistent recession. The last time inflation was this high was in the early 1980s, when Paul Volcker sat in Jerome Powell's seat as the chair of the Federal Reserve. Volcker raised interest rates to a high of 20%, resulting in a 2-year recession. It's shaping up to be a long and painful road ahead, but there will be blue skies again in the future. There is a lot of money sitting on the sidelines in cash right now that will flow back into riskier assets like stocks and crypto once the tide does turn. It's never been more important than now to stick with a solid investment plan, not to invest more than you're willing to lose in the short run. Think long term and try and not make emotional decisions with your money, as tough as that might be. And as always, stay hungry, and I'll catch you on the next video.